Happy Monday, everybody. I hope you had a great weekend. Today is June 12, 2023, and this is your Monday market update. Last week was void of major news. Overall, as far as things have been, DC was quiet, Fed was in blackout period, only a few earnings reports left, a few price pieces of eco data. So let's review, hit some high points. Let's talk about this week. Going into the week, last week, the last 3 weeks of rally have really come from real things. Megatech, AI, Fed skip, Fed pause, Fed pivot. Relief that the banks did not all fall down. Relief that DC finally got the debt deal done. Nice moves, but let's stay on our toes. If you've not experienced this before, just note everyone gets giddy, forgets that we still may have issues. We have Fed hikes, commercial real estate, consumer credit at all-time highs, recession fears, earnings coming down. Will FOMO, the fear of missing out, give way to phobia, the fear of being in? We'll have to see. Black swan events can still happen, so we'll see how that goes. Stocks opened nearly unchanged on Monday as quiet news wires let everyone focus on digesting the moves from the previous Friday. The Goldilocks jobs report, as the market seemed to react to it, something in it made everybody happy. So whatever made them happy, they just ignored the rest. Overall, eco data and Apple were the news makers, if you want to call them that. Like I've been reporting to you, these oddball indices and surveys that no one's ever paid attention to, these are not quite that, but the news from last week was not market-moving news. Price indices in the PMI reports are falling, and that's good, think disinflation. Otherwise, Apple opened their worldwide developers conference with the rollout of the Vision Pro, their AR/VR headset, priced at nearly $3,500. Comments were all over the place. Two that I think they're very interesting as you think about what this might mean for the future of this and other tech, or other companies, or worse, humans. That anything Apple keeps getting rid of, anything Apple does keeps getting rid of all interpersonal communication. First, the comment, and that is, it's like wearing an Apple Watch on your head. So I don't know about that. And then the one that I want to dig into, it could replace those 2 and 3 monitor setups that you have at work or at home. So interesting, this might have a longer term impact on the monitor industry, the office furniture, power. It's a domino effect, so we'll have to see how that goes. In other news, regulators are thinking about requiring banks to increase their capital requirements, think liquidity and profitability of the banks. OPEC Plus and the Saudis are trying to pare back production again and move prices closer to that $80 per barrel that they need to fund their budget. That helped markets for about 10 hours. Then it rolled back over, demand and supply still in the question. One big one carrying into this week, Russia does not seem to be holding anywhere near the quota that they've got. Just to be clear, in the past, most of OPEC Plus has never held onto their quota. Now it's more of just one player with overproduction. Overall, at the end of the day, Monday, the Dow was down about 0.5%, S&P was down about 1/4%, the NASDAQ was almost flat, slightly lower on the day. Top of the news line, will there be a restart to the technical bull market? The definition of that is a 20% move higher from the low. We started the week, touched 20% intraday, but not as of Tuesday morning. More on that later. If we get a close of the S&P over 20% higher, we'll close the book on the bear and open the new bull market. The NASDAQ did this a while ago. I mentioned it then. Quick facts. That would bring the bear to a close at about 9.5 months with a max drawdown of 25.4%. The average since 1929 is 11.5 months with a max drawdown of 35.5%. Contrast that, bull markets run on average 39.1 months and rise 124% on average. We'll have to see what happens next. Markets open slightly lower on Tuesday. As I've mentioned to you, there's simply not much to move the tape. There was a surprise rate hike by the Reserve Bank of Australia, and there is a small concern that that is a preview of other central bank action. Canada up later in the week, and of course, the Fed is meeting June 14 and 15 this week. No U.S. eco data, no Fed heads. Later in the afternoon, the World Bank did raise the growth forecast for a change, up in the U.S. and up for the globe too. That news is not bad, or are we back in the good news is bad? Not yet, so we'll see how that goes. As I mentioned, regardless, by the end of the day, the Dow was flat, the S&P was up less than 1/4%, and the NASDAQ was up 1/3%. The market gave back some of those small gains on Wednesday on the news of soft export data from China. Remember those numbers that I mentioned in the past few weeks. China's a huge importer and even a bigger exporter. That's a litmus test for global growth. Add to that the Bank of Canada, just mentioned them, surprise rate hike, as I mentioned to you. The Dow ended up 1/4%, S&P down about 1/3%, the NASDAQ was down 1 1/3%. Stocks did rebound from that move on Thursday as higher than expected jobless claims numbers gave people the idea that maybe this super strong labor market is cracking. Again, not sure why that's good, but remember, all the compasses are pointed at the Fed right now. So Treasury yields were down. Yes, tech stocks are up, and oil was down more. This time, new reason. The U.S. and Iran had another rumored deal. That was debunked soon thereafter, but it was out there. So the Dow was up 0.5%, S&P up about 2/3%, new high for the year, and the NASDAQ was up a bit over 1%. As we close the end of the week's review, quick one more random survey to share. The FinancialJuice.com publishes a fear and greed index. I told you, they're weird. On investor sentiment. Tipped into the extreme greed zone, 75 out of 100. Historically, this is the FOMO level. Chasing is being done. We know that. And we know that we're vulnerable to sharp corrections, but it's just another data point to watch, or just another fun one to quote. Friday had the S&P come within 3 points of an intraday high from last August. Too much to worry about going into the week to keep that momentum going, though. Eco news, Fed meetings, ECB and Japanese Central Bank all this week. Federal indictment of Trump also last week. The market closed slightly higher, cautiously because of this week's data. The Dow, S&P, and the NASDAQ all up less than 0.25%. Pretty much all in lockstep. Let's wrap up the week. As I mentioned last week, pretty quiet week, even in the recap. The Dow was up just under 0.5%, the S&P up 1/3%, the NASDAQ was up less than 1/4%. Looking into this week, all of the oxygen was taken on Wednesday at the Fed decision, but there's a lot to watch. Big news, CPI tomorrow, PPI Wednesday, then of course the Fed announcement in the presser. Not to let us down, we'll get retail sales on Thursday. This is important. Remember, one of the risk factors is that the consumer is getting in over their heads in debt, and they'll have to cut back. We'll see if that shows here. We'll also get jobless claims, some manufacturing data. Then we'll end the week, as we often do, with University of Michigan consumer sentiment and inflation expectations. Due to the Fed meeting, we may get a reprieve in the Fed heads, but you never know what Thursday and Friday may bring. Wrapping up today, please try the clear glasses, not the rose-colored ones. Yes, this is in the short term. Sentiment will push this market around, but by the end of the week, we may see the Fed off of the front page. Doubtful, but possible. And if so, we'll see earnings come back, and that may be concerning. Maybe we'll see the smoke clear in the east, and especially on the AI stocks, and we'll see who may really have earnings power from this push and who is riding just the coattails. As always, keep to your plan, stay focused on your goals, the long-term and the short-term ones. There can be a silver lining regardless of your positioning. Keep in touch. Come back on Friday for the Friday planning video. Until then, check out the June blog on the website and stay in touch. Have a great week.